In terms of payment banks, our view is that to start with, there will be more of an opportunity for both the universal banks and them, because they have a scope to coexist. If you roughly look at the picture, there are about 100 crore mobile subscribers in the country compared to say about 50 crore savings account holders. Now what these banks would offer is expanded reach for the overall banking system, while they would ask in lieu a small share of the transaction volume to come to them. So as these banks build up their models, get their cost structure in place, I think they'll need to be dependent on the universal banks in the initial period. So I think more of a opportunity in terms of payment banks. But when it comes to the small finance banks, clearly they have profitable assets from day one. But on the liability sides, they will need to chip away from some market share away from the public sector banks, and particularly the regionally dominant banks. So clearly small finance banks would be an immediate threat for the global banks in our view. If you look at the philosophy behind a payment bank, the idea is to increase inclusion on the liability side, because whatever is the cash which is in the system outside the banking system, these payment banks are expected to bring that under the formal banking fold. So that is the basic idea behind payment banks, while small finance banks on the other hand would actually bring the asset side within the purview of the banking system. One simple example is, I mean, if you add Bandhan Bank and the 10 MFIs that have got the license recently, about 55% of the assets under management for the microfinance companies in India have now been brought under the formal banking ambit. So clearly the direction in terms of inclusion is there, but how each of them chart their own trajectory remains to be seen. One immediate comparison which comes to mind is, I think, the M-Pesa's experiment in Kenya, or some of the mobile subscribers which have seen a good profitability in the sub-Saharan African regions. It's not exactly an apple to apples comparison, because many of these geographies, many of these countries have, you could say, underdeveloped banking system, and the transaction costs are fairly high there. Compare that with India, where almost all of us who are under the fold of formal banking pay almost minimal amount in transaction. So first the consumer behavior needs to be developed for people to really understand and really be willing to pay some fee or a minor amount to get included in the formal banking fold. So for these payment banks in particular to be successful, I think it will be a long and gradual trek for them. They'll need to develop the business models, they have to innovate on the product front. First of all, they have to develop the ecosystem where all the subscribers are at least appreciate the value of being under a banking umbrella, and they are willing to pay something for it. On the other hand, if you look at the small finance banks, most of them are going to be profitable from day one, because they are already they are running profitable MFI businesses. Although our sense is on the ROA front in the near to medium term, there would be some moderation, because they'll need to grandfather the lending from the banks which they have on their books, and instead focus on the granular liabilities which would come at a cost. So those models will take some time to evolve, but our sense is payment banks could take longer to break even or show profitability compared to SFBs.